Tonight we are doing a review of the top stocks in Li Lu's billion-dollar portfolio. A reminder that most active funds cannot beat the S&P 500 long-term, and to always do your own research. But I'm Hugh from Wall Street X, and starting off his list at number 3, he has a Bank of America BAC stock. The one-year return for Bank of America has been 22%, and the average analyst rating right now is a buy, and the average one-year forecast is 3.8%. The stock has a pretty good valuation, especially given the earnings growth. The WSX rating is a strong buy, and we maintain a 20.7% one-year price forecast for this. Pretty good dividend at 2.05%, and that's really the story with this one. Strong dividend history, very attractive valuation given the forecasted growth, strong and diversified business model. However, insiders are mostly selling the stock right now, which is interesting, and it does have rising debt levels. But that being said, the risk is still pretty low. The reward we put as high. That's going to make Bank of America a strong buy for us. And his second most holding is PDD Holdings, or PDD. The one-year return has been 7.2%. The average analyst rating is a buy, and the average analyst forecast is 32.3%. Super low PE at 11, and earnings growth is pretty high. We have a strong buy on this, and our target price is 23% 1 year from now. They've beat all 4 of their last earnings calls. They have a great valuation with high EPS growth forecasts, very strong revenue growth, and low debt levels. There may be some regulatory headwinds and rising geopolitical risks, so that's going to raise this risk profile to medium, and the reward is a high. So we've put this one as a strong buy as a result. And number 1 on his list is Alphabet, or GOOG, and this is by weight in his portfolio. GOOG has returned 59.7% this past year, and analysts have rated this a strong buy with a negative 3.3% forecast over the next year. Pretty fair valuation, but their earnings growth, they used to be pretty medium. Now they're starting to come into the low digits for CAGR growth. Small dividend at 0.27%, and we have this one at a hold, and we project a 0.6% increase over the next year. Google has beat 3 of their last 4 earnings calls. Very good product moat. They have dominated the search engine market for a long time, and it looks like they're going to continue to do so. Insiders are absolutely scooping up the stock right now, which is a great bullish sign. Very good revenue and EPS growth. Very good on both fronts. And they do have questions about profitability in their AI investments, though. Gemini is a good product relative to its peers, but there are questions in general just around how profitable it's going to be. Nobody really knows, but everybody has their own guess. And even though Google's product mix is highly diversified, they're starting to see competition really heat up in a lot of their key segments. So all that given, though, the risk is still pretty low. Google's position as top dog in the search engine industry and the AI industry is pretty well solidified at this point, so the risk is low. The reward we put as medium, so we've put GOOG as a hold, but the case for a buy could certainly be made. And that is our review of Li Lu's top 3 stock holdings right now by weight. You can visit wallstreetexec.com for more content and ratings. Otherwise, have a great night, and thanks for watching.